Welcome back. You're tuned into Bazaar Morning Call. Well, let's get some fundamental analysis going. We have Amnish Aggarwal, the Director of Institutional Research at Prabhudas Lilladher, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Amnish, how are you all feeling about the markets? You all have been doing a lot of calls with your clients. What's the mood like? And, what are the top buy ideas you'll have? Because when the markets pull back, you get a lot of stocks at far more palatable valuations. So if you could give us a couple of names.
Okay, so the markets have been actually going down. It is more like a regular thing that you can say, look at the market, every day it goes down 50 points, 100 points. And the fall, particularly on a Friday, was very steep. Now, if you look at fundamentally, I think the things are improving. The economy is actually coming back to life. 3Q GDP numbers were good. And there are hopes of revival definitely over there. Now, the only trouble which seems to be there is that when people buy and next day or in the few days you see the stock down 5%, 7%, then it puts people off to some extent. But having said that, I think it is more now like a market which is driven by the news flows and technicals, because fundamentally, I think things are more or less, I think a lot of it is already been discounted. Now, in terms of, say, a few stocks, I think if you look broadly, if we look at, say, our recommendations of stocks, I think today you will find that many of these stocks, they will show you very good, you can say, upside because the stock prices have corrected. Now, specifically coming to themes, I think there are two key things which are very visible now. First of all, the government Capex has picked up. So the entire Capex, defense, I think all that story, after a gap, I think that will start playing around. One of the key stocks there is Bharat Electronics, which is a play on all the armed forces. The order book is good. The stock today, I think it is available at sub 30 times valuations on FY27. I think this is one stock which looks reasonably good to us. Now, if you look at, say, the other pie, for example, in the, say, your Capex, you can have more stocks. For example, even ABB, Siemens, they have corrected. Praj has corrected. So there are a number of names which you can find which look good at the current prices in particular. So now, if you look at the
So BEL, ABB, Siemens, Praj, that those could be part of your top list.
Yeah, but having said that, one should be ready that the growth rate, say, for the next couple of quarters at least, it will be lower than what the growth rates people have now used to over the last couple of years. Because the ordering momentum in between was lower and now the base is not that low for all the companies. So the growth rates now will be more secular. Maybe one can expect anywhere between, say, 15%, 17% on a CAGR basis. But having said that, a lot of froth in the valuation has also come off. Now, if you look at the other pie, which is very important for the Indian markets, that is the domestic consumption. And domestic consumption, I think we are close to the bottom and we will slowly start, you can say, witnessing the recovery. And if you can recall, particularly last year, 1Q and 2Q were not great because the elections were there, too much of heat was there. So my sense is that the numbers would have bottomed out and we will see, you can say, slow recovery. But having said that, the way the Indian economy is, we might see the recovery coming more on the discretionary side than on the staples. So if you have to pick, say, stocks over there, then on the auto side, Mahindra and Maruti, these are the two stocks which look good, particularly M&M after the sharp cut which it has seen in the last 10-15 days at around 25,000-26,000. I think M&M looks very, I think it looks really, really good at the current prices. Similarly, if you look at what is happening, for example, the airlines are doing very well. We have seen very strong, you can say, your air travel around Kumbh and all. So I think the entire travel space will do well. And it is more like a multi-year story. And the biggest stock to play there, one can play through two ways. One is your interglobe aviation, which is Indigo, and one can look at hotels. The third could be, you can see the other segments in discretionary in which some, you can say the stocks which cater to air conditioners will come because we are likely to have very intense summer this year. Last year, they had very strong growth, but if the summer, as per the initial indications, it is good, then AC stocks can have, you can say, good run for another year or so. So in addition to it, I think on the staple side, you can look at, say, maybe a Britannia, because at 4,500, the risk reward is highly favorable. ITC sub 400, it looks really interesting. Broadly on the discretionary side, even QSRs, even you can say some of the jewelry, they should do well. But the valuations there are not as attractive as it might seem to be for a stock like, say, a Britannia or an ITC. But yes, some of these segments, they are all, I would say, they are all near the bottom as of now. So it would be, I think, a phase of very selective stock picking in my view.
Okay, some interesting ideas there. So perhaps some from consumer discretionary, some from staples, and a couple of names from the Capex space as well. Amnish, I want to draw your attention towards cement stocks because the numbers have been looking good. I mean, even in the core sector data, cement production was actually the best of the lot. And it seems the price hikes have been holding so far in the fourth quarter. There's a note from Nomura this morning. They're saying, I think the average Q4 price hike is about 6 rupees. 3 rupees have happened, pan-India price hikes in March itself. So does cement look interesting to you? And if yes, then which stock would you go for?
You see, cement stocks have actually, they have also, along with the market, they have got better in the past few months. And the 3Q numbers were also not great for all these companies. Now, if you look at, let's say, at Ultratech around 10,000 or Ambuja sub 500, I think the stocks per se, they look good. But cement sector, I think that there's a lot of, you can say, hopes built around that once they all start using more renewable energy, their costs will go down and the margins will go up. But if you look at cement sector over the years, we have not seen any meaningful increase happening in their EBITDA per ton. Because a lot of these efficiency gains which the industry actually gets, they get passed on to either the consumer or, for example, the government buying or you can say buying on the institutional side that has been quite big over the years. So if one has to pick your cement stocks, I think Ultratech still looks to be the best, followed by Ambuja Cement.